On our last outing, we began sharing with you what transpired at an interactive session with journalists, influencers, and public analysts on the new tax laws hosted by the Presidential Committee on Fiscal Policy and Tax Reforms. The chairman of the committee, Mr. Taiwo Oyedele, in his address, clarified issues, cleared misinformation and inaccuracies. The occasion also provided Mr. Oyedele the opportunity to take the attendees through the provisions of the new acts as they concern the major tax types: personal income tax, value-added tax, companies income tax. In this episode, Mr. Oyedele shed light on the high points of the Nigeria Tax Act 2025 as they relate to personal income tax.
So let me start with the first one, which is personal income tax. So there have been narratives suggesting that even minimum wage earners will have to pay tax. Poor people will pay tax. Anybody any more than 800,000 naira will pay tax. All manners of narratives. Let me tell you what is true. If you go into the new tax laws, you'll see there's a tax table. The tax table contains what we call taxable income by bands, and then the applicable tax rates. But the important distinction that we must pay attention to is that there's a difference between gross salary or income and taxable income. If you are paid 100,000 naira per month is what is your employment contract, then your gross salary is 1.2 million naira in a year. That is not your taxable income. To determine your taxable income, you take your gross income and you make two important adjustments. Number one, you would adjust for what we call statutory deductions, that is, deductions that are allowed by law. These deductions include pension contribution. Many of us, if not all of us, are required by law to make pension contribution on a monthly basis. We also have contribution to NHF, National Housing Fund. We also have NHIS. We also have people who borrowed money to build their own houses and they claim interest on the loan that they pay to build their houses. And we also have other deductions like if you are able to get to that level, you pay for life assurance of yourself and of your spouse. All these things I've listed to you are called statutory deductions. You take that amount out of your gross income. Then number two, you deduct what we call reliefs and allowances. For instance, under the new tax laws, whatever you paid as your rent, you get 20% of it as a relief up to 500,000 naira. So whatever that amount is, take it away from your gross income or salary. The balance is then called taxable income. That is what you take to the tax table to apply the first 800,000 naira at 0% and the next at the rate that is there, and so on and so forth. So if someone earns a national minimum wage of 70,000 naira, in a year that would be 840,000 naira. It is very unlikely that they have no deductions and they have no relief and allowances. But let's even say they have none, okay? They just collect their salary, 70,000. Nothing is deducted. They don't make any contribution. They are not interested in pension. There's a provision under the new tax laws taking effect from January 1st, 2026 that says you cannot take national minimum wage into the tax table. If government wakes up today and say new national wage, minimum wage is 200,000 naira per month, these new tax laws will already exempt the whole of that amount from tax because there's a provision that says the national minimum wage should not be taken to the tax table. So no matter how you analyze it, if you analyze it mathematically using deductions and reliefs, national minimum wage will not pay tax. If you don't like that analysis and just keep it simple, there's a provision that says do not pay tax if you earn national minimum wage. But in fact, what we have in the new tax law goes above minimum wage. What you expect is that people who earn even up to 100,000 naira a month will not pay tax. And above that level, up to around 1.8 million naira, will see a reduction in the amount that they currently pay, so that from January next year, they'll have more take-home pay. You know, some people just went to the table and see where it says the next 3-point-something million, and they just took the rate and said, this is what they'll collect from you. By the way, you know, they always blame the president. They say Tinubu. Meanwhile, this personal income tax is even going to the states. It's not even going to the federal government. But of course, when you're a leader, you have to take everything they throw at you. And the president is not even complaining, so I won't complain on his behalf. So, this personal income tax regime is pro-poor. Now, overall, about 97% of Nigerian workers in the public and private sector will either no longer pay PAYE or will pay less PAYE than they were paying before. Only the top 2 to 3% of Nigerians are the ones who will pay more, which is what you should have around the world. Under our current tax system, somebody earning 400,000, 500,000 a month is already paying the highest tax rate, like somebody who is a billionaire. How does that make sense? This system promotes inequality, and it's not sustainable. What we have now done is to truly protect low-income earners, reduce the tax on middle-income earners, and increase it on high-income earners. Of course, high-income earners will not be happy, isn't it? Because nobody wants to pay more tax. But even the highest rates that the highest of income earners will pay in Nigeria, if you earn 1 billion naira every month, the highest is 25%. This 25% in Nigeria is much lower than 35% in Ghana, 35% in Kenya, up to 45% in South Africa. You know, I've not even left Africa. I'm just within Africa. And one other reason why we thought to increase the top rate for the high income earners to 25% is because Nigeria is one of the few countries that I know of in the world where they tax companies at a higher rate than they tax individuals. You know what that means? When the rate for companies is higher than the rate for highest income earners who are individuals, it will not make sense to formalize your business, because you are better off just operating as an individual, even if your business is worth billions, and just be paying your lower personal income tax rate. Because the moment you go and register with CAC, your tax rate goes up. Just think about this, and you can do this research on your own when you have time. Look around the world. It's the other way around. The highest income earners, individuals, have a higher tax rate than the rate for companies, so that there's an incentive to want to formalize, so you pay the lower rate. And when you allow companies and businesses to formalize, the advantage goes far beyond taxes. It's about growth. It's about ability to scale. It's about ability to partner with other investors. It's about ability to invest more and develop the economy. So this is one of the reasons why we said, for these top income earners, let's increase their rate to 25%. Currently, it's about 19% effectively. And then reduce the rate for companies from 30 to 25, so that at least there's some semblance of sanity for people who want to formalize their businesses. In addition to that, these new tax reforms have increased the threshold for exemption for small businesses to 100 million naira a year. Currently 25 million, 100 million naira a year turnover. If you register a company to do that business, your company income tax rate will be 0%. 0%.
Clarifications galore. Surely better days are ahead. Kudos to the Tinubu government. Of course, the new provisions take effect from January 1st, 2026. One may ask, where did this all begin? Personal income tax has a long history. The Personal Income Tax Act is an act to impose tax on individuals, communities and families, and on executors and trustees, and to provide for the assessment, collection and administration of the tax. In 1904, Lord Lugard introduced income tax in Nigeria with the introduction of community tax in northern Nigeria. He later made changes which crystallized into the Native Revenue Ordinance of 1917. At independence, personal income tax came into its own with the enactment of Income Tax Management Act (ITMA) 1962. As time progressed, personal income tax extended beyond ITMA with the enactment of the Income Tax Armed Forces and Other Persons Special Provisions Act 1972, as well as other amendments up to 2004. The Personal Income Tax Decree, now Act, which came into effect on 25th August 1993, repealed ITMA. However, when the Personal Income Tax Decree was enacted in 1993, it did not provide for the establishment of state internal revenue boards. The omission was corrected by the Decree number 31 of 1996, which established state boards of internal revenue. The federal and state revenue boards are empowered to identify persons living or earning income from Nigeria who are required to pay tax, and to assess and tax their incomes using specified guidelines and rules. In the year 2015, the Federal Capital Territory Internal Revenue Service was established, and it took over the administration of personal income tax on residents of the Federal Capital Territory from the Federal Inland Revenue Service, leaving the FRRS with the administration of personal income tax on officers and men of the armed forces and the police, and officials of the Foreign Affairs Ministry. In 2005, the Personal Income Tax Act was one of the laws sent to the National Assembly for amendment, but was finally passed in 2011 and was signed into law by Dr. Goodluck Ebele Jonathan, the President of the Federal Republic of Nigeria, on 14th June 2011. In a groundbreaking move that underlines the resolve of the Bola Ahmed Tinubu administration to take Nigerian tax system into the modern age, the Taiwo Oyedele Committee took a detailed look at the personal income tax legislation and came up with a brand new law that is set to revolutionize personal income tax administration in Nigeria.